Well, it's an ET Now exclusive, and this one is on the very contentious sovereign bonds or overseas bonds, and it looks like the government is unlikely to issue these bonds in this fiscal. There was a fair amount of criticism that was received on these bonds, especially given the fact that there is the entire currency movement that would not bode well if in case we do issue these bonds. And now, of course, the PMO seems to be rethinking on this one as well, after we told you about the FPI surcharge bit as well. Ruchi Bhatia joins us now, and Ruchi, it looks like the PMO seems to be picking out yet another proposal by FM Sitharaman.
Absolutely. The fate of key budget proposals that Nirmala Sitharaman had put in her maiden budget hangs in balance, top sources indicating that big announcements on overseas sovereign bonds too may not see the light of the day this fiscal year, given the current economic vulnerabilities. Now, we're given to understand that the government could be looking at borrowing the entire 7.1 lakh crore borrowing figure from the domestic markets itself. The Prime Minister's office, after seeing representation from various economists as well as the RSS-backed Swadeshi Jagran Manch, had said that they will seek stakeholders' views with respect to this issue. We believe the Prime Minister's office is of the view that at this point of time, given the volatile, currencies, given the fact that trade wars are making the world currencies volatile, it is not the right time perhaps to go ahead with overseas sovereign bond issuances. Remember, we have seen how the Indian rupee too yesterday, got a knockdown in trade. Not just that, the global yuan as well was at an 11-year low, and we're given to understand that the government, after having multiple discussions within the government with external economists over the last 10 days, believes that at this point of time, local and global environment is too uncertain. They want to first focus on the domestic woes. No wonder then that Nirmala Sitharaman is holding meetings through and through with all sectors, including various industrialists as well as the auto sector, MSME sector as well. They believe it is the time to understand that the economic slowdown, should be addressed much before the government goes ahead and is able to go ahead with the overseas sovereign bond issuances as well. They believe the time of it is an important time to do a deep study of the sectoral issues that are needed to revive the growth. And once we can go ahead with overseas foreign bond issuances, once we are back on track, there are fewer vulnerabilities and we have stronger economic growth as well. Right now, the economic situation is too volatile and looks like the entire proposal has been put on a back burner for at this time.
All right. Ruchi, stay on with us. We are also joined by Maithili Busnurmat and Jayesh Mehta of Bank of America Merrill Lynch. Thank you to both of you for joining in. Maithili, let me get in your comments on this story. And it looks like now, after the FPI surcharge, the government is giving that whole sovereign overseas bonds bit a relook, and it's unlikely to be issued itself this fiscal. So your initial comments on this?
Well, I think the currency volatility we are seeing with the yuan slipping below 7 yuan to a dollar is a very timely warning, given that the government was considering a sovereign bond issue, despite many observers saying that it is very risky, exposes the country to higher volatility, and it is just not worth the cost. The reward return is just not enough. The risk and reward, the balance is just not in favor of reward. So we need to stay clear of sovereign bonds. And the government was not very sure about it. But now this kind of volatility that we're seeing in domestically as well as internationally is a very timely warning. And hopefully the government will not seriously rethink sovereign bonds just today, but maybe for the near-term future as well, because we do have vulnerabilities as a developing economy. And though today's situation does make matters worse, it is unlikely that we will be ready for sovereign bonds anywhere in the near future.
Absolutely, Maithili. Let me take it across to Jayesh Mehta as well. Jayesh, as Maithili was pointing out, that the risk to reward ratio is not, was too high in favor of the risk with respect to the overseas sovereign bond issue. And given, we have seen how, the trade wars are making the global currencies volatile as well. how are you looking at what we're picking up right now? The fact that the government is going to hold for a while before they, rethink on the overseas sovereign bond issue. They believe that at this point of time, the global economic situation is too volatile and they should wait a while before they go ahead with the budget proposal.
I think of course, global always will be challenging, and that at some point of time we will have to face it. But at this juncture, we have challenging local situations too. And I think they are doing the right thing in terms of prioritizing, meeting industries. We need a lot of support to be coming to revive and get things back on the track. Maybe we might need huge liquidity support. We might need huge rate support in terms of rates going down, and also sectorial support, which is really required. Right now we are seeing stress. Yes, NBFC was an issue, and then developers was an issue. But if you really go down, it is now impacting MSMEs, it is impacting salaries, right? A lot of people not getting paid salaries for last 2-3 months because their businesses are not doing well. I think that needs to get back into track, because this can really spiral out big time, because if people are finding it difficult to find jobs, forget finding new jobs, even existing jobs not getting salary can impact your retail portfolio too. So from that perspective, we need to revive the economy, and if required, we need to give huge financial stimulus to the economy, and that will also take 2-3 months to revive.
Jayesh, no wonder then, within 1 month of the budget being announced, we are seeing serious rethink on various budget proposals. Help us understand, a lot of domestic economists were of the view that countries like Brazil, Argentina, Mexico have been stuck in a vortex that are now, that had gone ahead with an overseas foreign bond proposal, and which is why India should not go ahead with something like this. Does that argument, hold ice with you? How are you looking at the current economic situation vis-a-vis what has happened in other foreign countries as well? Do you believe that the risks were too high and India too has, could be stuck in a vortex, so to say?
I think India is that way as of right now quite insulated. Except we have free things on the equity side. So we will see some volatility on the equity side because of the global situation. But the global growth, global situation at this juncture is vulnerable. But more than that, I think, we have to look at our own house, which requires a lot of support. I would say it really requires a lot of support.
One more question. Right. Maitri ma'am, help us understand, in terms of the domestic issues, we are seeing Nirmala Sitharaman holding various meetings. In fact, she is meeting MSMEs today as we speak. There will be a meeting with the auto sector. There will be meetings with the top industry leaders as well. And this is coming in at a time when a lot of big industrialists from A.M. Nayak to Deepak Parekh all have raised concerns with respect to the slowdown in the economy. Given the fact that, of course, on the monetary side, we have to still wait and watch out for what the MPC does. But what are the fiscal options, fiscal tools available? Can the government look at any sort of a fiscal stimulus, or do you believe that their ability at this point of time is very restricted, given, the fact that revenues too will be severely hit given the slowdown?
When you talk of fiscal deficit and revenues, it's a bit of a chicken or egg situation. When revenues are down, yes, it is difficult to think in terms of containing the fiscal deficit. But at the same time, revenues are a function of growth. So if the government does spend wisely, you could see growth picking up, in which case revenues could pick up. So it is a bit of a chicken or egg situation. And I've always been of the belief that the government needs to reprioritize its spending and make it towards rather than consumption to productive capital spending. And at the same time, not be so rigid about its fiscal deficit target. There is no great sanctity about a 3.3 or a 3.4. When circumstances change, one must have some flexibility. One cannot expect monetary policy to do the heavy lifting simply because monetary policy, A, acts with a long lag, it's a very broad brush, and you really cannot ensure that you can just make money cheap. Does not necessarily follow that people will borrow or industry will invest. Whereas if government spends on roads, on railways, on construction, that immediately creates jobs, it creates incomes. So I think government must realize that it cannot be so rigid about fiscal deficit and expect monetary policy to do all the heavy lifting. It will not work. It will just lead to a resurgence of inflation maybe after a while. So government can loosen up its purse strings a little bit, but at the same time spend wisely, not on consumption, but on productive investment, which will lead to incomes as well as create capacity.
All right, on that note, let's thank then Jayesh, Mehta as well as Maithili for joining in. And of course, dissecting this entire news, like we said, this is something that is coming in after the PMO has already, as per sources, met the FinMin on the entire issue of FPI surcharge. And now, of course, there are doubts even on overseas bonds. By the way, look at the rupee. I just want to, in fact, pull that up before I look at the yields, because we've seen a sharp surge come by. Well, not a sharp surge, but a spike at least in the Indian rupee versus the US dollar. I'm just going to ask my producer to pull that up. And there you can see it. It's a very tiny spike, though, mind you. 70.77 now. We are more or less flattening out when it comes, actually no, we're depreciating further now versus the US dollar. 70.77 now on the INR versus the US dollar. Sharp spike seen just as we speak, in fact. And on that note, let me also take a quick look at the bond markets and see what the plan is. Remember that Nirmala Sitharaman, after this announcement with respect to issuing foreign currency bonds, had spoken also about how this will essentially move the fiscal deficit as well, because it's important to now source money from in more innovative ways of sorts. For now, the change is very minor, and that's, of course, the bond yield still, of course, on the way lower only at 6.38.